Okay, welcome everybody. My name is Jeff Green, president of Green Team Realty. Thank you for joining me for the September 2019 housing market update. We're going to introduce our panel in just a bit, and we're going to talk about the stats that I'm about to show you right now. So give me 1 second to set up the screen share, and we should be live there. So, as we're preparing the information for this, it's interesting to me that we're starting to hear the word recession far more than we did a year ago, far more than we did 6 months ago. The big buzz is, are we headed to a recession? If so, when, and how dramatic is it going to be? But the bottom line is, most people think that we're not going to experience anything like we did back from 2008 till, I would even argue that it went through 2016. So let's take a look at what some reasons are why that is. Number one, equity positions. Many people are in a very strong equity position as far as their home goes, right? And just to break it down for those of you who may not know what equity is, it's the amount of money that is in the value of the home. So in other words, if you knew what the fair market value of your home was versus what your payoff amount on your mortgage was, the difference between those two is the equity. So a lot of people are in a very good equity position. I heard Karen and our producer, Melissa Brissett, talking about a little bit over 1/3 of the U.S. households are free and clear of any mortgage. So that's a very strong number. That's good. It's from a balance sheet perspective, we're doing really good as a nation. So that's a good thing. We've had good appreciation over the last few years, and it continues to remain. And most experts think that despite the fact that the market is cooling, appreciation is still going to be a thing, right? That happens here over the next 12 months at least. And the question is, by how much is what everybody seems to be fighting over. Inventory levels are relatively low still. Okay, days on market, as you'll see when we get into some of these graphs. The days on market is low, bidding wars are still happening, so on and so forth. Mortgage and interest rates are fantastic. I think if you were to have asked a lot of mortgage professionals a year ago where rates would be now, they would not have predicted how low rates are. So the low mortgage rate environment is really continuing to fuel the real estate markets. That's a good thing. We're going to talk about a level of affordability that we haven't seen in a long time. In other words, when you package everything together, earnings, mortgage rates, taxes, yada, yada, prices of homes, and you blend all that together, you get affordability rates. And we're at really historic highs in terms of how affordable it is for the average American to buy a home. And then some historical recession data. So we're going to cover all those things here quickly. So here's just, again, some more information. If you're watching the recording of this, obviously you can pause your screen and take a look. But essentially what you're seeing is year-over-year appreciation growth. And you can see that, it's still very strong. It's still about where it was, 4 or 5 years ago. Percent negative equity share. In other words, who's in a negative equity situation, meaning that the mortgage payoff is higher than the fair market value of the home. That has been steadily declining since 2010, and we're at the lowest level since then. So those are very good signs. Appreciation, you can see just with a quick glance on the left-hand side of our United States of America here, nothing is below zero, and everything is still appreciating, so to speak. And then here we go and see by price range over on the right-hand side, all price points is indicated in gray. And you'll see, of course, the lowest appreciation happening at the high end of the home sale market. And that's pretty consistent, right? I mean, the lower end is usually there's more people that can afford or want to buy lower homes. Investors even want those. So there's a bigger market pool, more demand, so it drives up price, right? But needless to say, even the high range is experiencing appreciation. So that's a good. CoreLogic, which is really a leading provider of statistical data on the housing market, is projecting that over the next 12 months, the nation will go up by 5.2%. Not a decrease in price, but yet another increase of 5.2%, a very healthy rate of appreciation. And then you look over here to the right, there's some other sources, okay? So this map pertains only to CoreLogic. These are some other sources of information, and you just know at a quick glance, everybody's predicting a fairly substantial level of appreciation even into 2020. Excuse me, even into 2021. Some of these are not going out on the limb that far. Months of inventory, homes for sale. Again, you can see just, you look historically left to right when you read this graph, we're still at a very low level of inventory, which means that pricing, should continue to increase or stay strong. Year over year inventory levels, we had a little bit of a bump here in end of 18 into 2019, but you can see inventories tightening up here a little bit in the last market period, if you will. Mortgage rates, where are they headed? Where are they now? You can see that, here we are from January 2018 today. I mean, look at, again, like I said, if you were to have asked the mortgage bankers a year ago where they think mortgage rates would be, I don't think many of them would have predicted this at all. So I don't know if that means that we shouldn't be listening to them anymore, or if we should all just recognize that this is a good spot that we're in right now. Affordability, here's the discussion about affordability. So here, this yellow line is the medium home price, and then the blue, jagged edge basically represents our purchasing power. And you can just see that, it was much less of a variance, if you will, much less of a difference between the two lines going all the way up into 2005, which was really the worst period of time. But we've stayed very strong. I mean, you can see here in the crash, it came down, it became, the home prices went down, so affordability went up. But man, it hasn't really changed, and it's still, a good opportunity for people to secure one of the most important assets that they ever will, their home. Historical recession data. I think that I agree with this. I've agreed with pretty much everybody that's had this sentiment. This is going to be a much shorter recession than the last one, for sure. It's not going to last as long as it did. It's not going to go as deep as it did. Because the housing market's in a better position. We have better fundamentals in place than we did the last time around. Not nearly as much subprime lending, not nearly as much of these mortgage-backed securities packaging in subprime lending into it. Hence the reason for the explosion of the mortgage industry. And then, you can see here that, in the last set of recessions, only 2 of them did prices actually go down. 3 out of the 5 went up. So that's interesting to know. It's just hard for people like myself who were kind of started out in this industry just before the recession and labored through it. It's hard to imagine a period of time where we could go through a recession and appreciate, but who knows, maybe this one will go that way as well. Here's all the resources about all of our information that we're providing here. And let's get into some local data here. So Orange County, New York, we're taking a look at units sold. You can see the green line is 2019. It's, been a mixed bag this year, right? It's been up, it's been down. But, I think it's fair to say that the number of units sold is fairly consistently cooling off from 2018, and I would even argue from 2017 at this point. So we're definitely seeing a slowing of the number of transactions, but it's still a very high historical level. Still a very strong market. So yes, it's cooling, but it's still at a very high rate, high pace. Average sale price took a little dip this last month here. Doesn't necessarily mean that prices are ultimately going to continue to be down year over year versus 18. But look, units sold has been slowing. It's natural that price will follow the number of units sold, but I don't think we're going to see any sort of crash. I just think we're going to start to see a softening. Ask to sold ratio. This is the last asking price versus where it's sold and the ratio thereof. So you can see this year's been high. That means that sellers haven't had to negotiate as much off of their asking price as they had in previous years. However, just recently we've seen it dip here. So that's information worth noting. And days on market, how long is it taking to sell a home? Very consistently, we've been under every year of the last 6 years. So again, showing a strong market. Good information there. We're going to fly south of the border into New Jersey, up into down into Sussex County. Units sold. Similar situation, right? It's a mixed bag. It's been up, it's been down. But again, I think everyone could see here pretty clearly that over the last 18 months or so, the units sold has been slowing. Price, interesting that all through this time period, Sussex County, in terms of average price, was kind of languishing, and now we see like a rocket ship going up here. Price just took off, so that's interesting. Almost the highest level of average price in Sussex County in 8 years, only superseded by July of 2018. So prices are still in good shape in Sussex County. Asked to sold ratio, again, taking a look at these, very similar levels to what we saw in Orange County, 97, 98%. Strong market, when sellers are only having to come down just a little bit off their asking price, that means that there's a lot of demand for the homes. Days on market, again, the lowest days on market over the last 6 years. So the market continues to be strong. We're going to check in with our panel in just a minute, but first, some housekeeping. Next month, we are going to do the housing market update on Monday, not Tuesday. We always usually do it on the second Tuesday of the month, but something came up, so we're going to do it on Columbus Day, the 14th at 2 p.m. So be sure to join us. Be sure to stay connected with us as it relates to the housing market update by this URL, greenteamrealty.com/HMU. And of course, thanks to our friends over at Realty, who are building a better, smarter, and faster real estate referral network for agents. If you're an agent and you haven't joined, you're crazy. It's free. Join. It's a great thing to have. Okay. Karen Gonen, your mic is muted. Welcome. Thanks for being here with us. Karen is from Green Team New Jersey Realty.
Hi, guys.
Karen, what's going on in the field? Talk to me about where things are. You've been on a lot of these housing market updates over the course of months, and for those who have been watching, we've been debating kind of when this thing might take a downturn. What are you experiencing?
I think one of the things that has been consistent in the last several months that we've been doing these housing market updates is to notice that there are still people buying, there are still people selling, and there are still bidding wars due to inventory. On both sides of the border, we're dealing with not enough good houses, and now that it's so easy and so affordable to buy a home, we just need more good houses. That's all it is. I think some sellers are on the fence because they're waiting to hear what's going to happen in 2020. But I think with all this new information, if agents go ahead and educate their sellers, we'll see a lot more houses on the market in the coming months.
So inventory is still an issue. You and all of the buyers that you represent want more inventory to choose from. But with all that said, are you finding that buyers are becoming maybe a little bit more picky as time goes on right now?
No, not really. They're just rushing to put in offers on the houses that they like, which is great. We want to have offers. We want to make sure that houses that are good houses on the market do sell quickly, because that makes everyone look good, whether it's the listing agent, the selling agent. We all do better in that type of a market.
Now, from a seller's perspective, we're not in a marketplace where they can just list it at any price and it will sell, correct?
That's the surprising fact. I have to say that all the listings that I've had have all come in either at on point asking price or a few $1,000s above due to bidding wars. And they're going under contract very quickly. The attorneys are moving us along attorney review very fast compared to how they were earlier in the year and last year. I had one listing, we got out of attorney review in literally 48 hours, which is, it's never happened to me before.
With that said, I'm sure that you're carefully choosing comparables to make sure that the information is accurate and that you're setting a good asking price, right?
Absolutely. So that's the first thing. That's listing agent 101. You want to make sure you do your comps properly so that you don't sit on the market.
Right. And I think that's the message to all sellers, right? I mean, it's like the hardest discussion that we have as realtors, right? Is talking about a price reduction with the seller, because it's kind of like we have mud on our face, right? We're the ones that brought in the comparables. We make recommendations to sellers upon, about what we feel the fair market value is for their home. Many sellers don't listen to it, and they just want to list it at a certain price that they want, right?
Right.
But a lot of people do, and sometimes you have to do a price reduction. It's the hardest discussion to have, I think. being in the business a long time. But I think the point is, no matter what market you're in, you have to price it right. Fair to say?
Correct. So one of the things that I do with all my sellers is I ask them to tell me what their timeline is to sell the house. Meaning,
Right.
are we okay to sit on the market for 3, 4, 5, 6 months, or are we looking to get out and get an offer within the next month to 2 months? And according to what they tell me, that's where I price the house. So for instance, I have clients that said, oh, we don't care when we move, the house is paid off, we're not in a rush, and we want X for our house. So I say, that's okay, as long as you understand that according to my market analysis, we won't sell until we reach this price. And
Right.
as long as they understand that, then I have no problem listing. Ultimately, it's always the seller's decision. As
Yeah.
long as they make an educated decision, I'm okay with that.
Yeah. Right. And I agree with that. I mean, I've been wrong many times about my valuation of homes, and this is why it's a collaboration effort, right, between the seller and their agent, or at least it should be. Um, but of course, you have to. I don't know. I think that we could sit here and debate and go down this rabbit hole and be here for hours, but I would just say my final thought on it: price it right from the beginning, price it to sell right from the get-go, because there's a lot of data over the course of decades that shows you're likely to get a higher price if you sell your home in a shorter amount of days on market. And it's just because, there's never a better moment in time for your home than when you first list it. It's new. There's buyers out there all the time, 365 days a year, that are waiting for the next house to come on the market because they've looked at all the inventory. They haven't found what they wanted. And now your home is new and it's on the market. And so it's like you're never going to get a better opportunity to put your best foot forward than when it's new, fresh on the market. So to price it right from the get-go, I feel is extremely important. I think, you should always have a goal to move it right away, because statistics show that you're going to make more money as we go through. Okay, so Karen, one other thing before I ramble on too much here, and bore people and put people to sleep. I want you to talk to me a bit about what you're seeing in terms of bank inventory being released. You are what I consider to be a leading expert, at least in Sussex County, New Jersey, on bank-owned inventory and what's happening there. So clue us into what's going on there.
So we're actually not seeing too much being released by the banks. Whatever was out there was sold. I haven't seen anything new that's affordable for an investor or a flipper or someone who wants to do it on his own. I haven't seen those in quite a few weeks. I have seen some that are borderline live-in, so there's a few things missing from it, and those are priced too high.
Mm-hmm,
But there
mm-hmm,
really isn't any new release of inventory from them.
mm-hmm, mm-hmm. Okay. And are they continuing? Are you seeing bank-owned properties continuing to be rented? That's a new anomaly that we've seen over the last 5 to 6 years here. Are they continuing to rent the inventory?
As far as I know, they are continuing to rent them. So apparently banks want to be landlords as well.
Yeah, I mean, I think they're doing a fair job at it. I mean, I think, it's interesting. Clients of ours rented a bank-owned property, and once they got in there were just one problem after the other. Like problems like duct tape holding up a pipe because the
That's
bank
terrible.
took the lowest bid plumber, and the plumber did a shoddy job on the work, covered it up, put the sheetrock back on, and when it had to be redone, sheetrock was pulled down, and the next guy found that literally pipes are hanging with duct tape. So there's crazy stuff like that happening, and when you're a big organization like a bank and you're many people removed from the work being done on the ground, that's the kind of thing that happens. So I think I would caution people that are maybe buying some inventory, because we have some other agents in on the New York side of the border that do work with a lot of bank-owned inventory, specifically on the rental side, and they're starting to see the banks sell that sort of stuff. And you got to be careful, right, when you're buying something like that. I mean, Karen, you've said it before, right? They're just not doing the
Absolutely.
renovations the right way when they're trying to sell them themselves, right? You're finding similar things.
Absolutely. So all the flips that I've seen by banks, because apparently now they're flippers also, what
Right.
happens is they bid the jobs out to contractors. So the contractor that goes the lowest is the one that gets the job. Unfortunately, it's always the low end ones. And so when you're thinking that you're buying a newly renovated home, you don't think about the high end or lack thereof finishing. And that's the problem. I have had one set of clients that were just so upset with the type of work the bank did that they just went on an all around rant and they couldn't believe it. And I said, I warned you. We did inspections. There's really nothing I can do except refer you to other tradesmen that do a better job.
Yeah. 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 I mean, people get caught up in the moment, right? The price, and a lot of it's funny, through the years I've had people, walk in the door and say, I want to buy a bank owned property. I want to buy a foreclosure. And, like they were, tunnel visioned on buying a foreclosure.
Right.
I would just always try to get people to see that. Okay. So if you have house A on, one street, and house B, and they're basically identical in terms of the number of bedrooms and this, that, the other thing, and they're essentially priced the same, will you only want to buy house A because it's owned by a bank, or why wouldn't you want to buy house B because it's owned by mom and pop, right? So people get carried away thinking they're getting great deals from the bank, and you have to realize at the end of the day, you're buying an asset from an owner, and the owner just happens to be the bank. So
Right.
um,
So I have noticed that a lot of my investors are actually going to the wholesaling market as opposed to bank-owned properties, to REOs. And the only way for us to make money when they do that is to get the list side. So I would recommend to all agents, if you have investors that are good clients, stay in touch with them. Even if they've bought one or two houses, you should stay in touch with all your clients anyway. But especially
right.
the investors, you want to make sure you stay on top of them, because who knows, maybe they'll ask you to do a CMA at a entirely different location and you can list it. Why not get your name out there?
Yeah. Yeah. All right, good stuff. I think the takeaway for me is, being in this industry for, going on 15 years now, and just working a lot of hours every week during those years. I have such a great appreciation for agents who are working in the field, like Karen Goen and many of our other Green Team agents and other agents and other agencies throughout the country. And I can promise you, our housing market would not be what it is without the people working in it. Is a very important note to make. When you travel around the world, other marketplaces are not nearly as well run as what it is in the United States of America, because they do not have the agent base, the hardworking men and women of this industry, keeping our data accurate, making sure our clients' needs are met, making sure little things like the home inspections and knowing the difference between bank owned and this, that, the other thing. It's all really important stuff. So we're getting into an age where there have never been more options to maybe purchase a home directly off of Zillow offers or something like that. And it's just, a big decision. So find a realtor. That's my advice. All right, everybody. Karen, final thoughts?
No, I think we've said it all.
All right. How does somebody get a hold of you, Karen, if they're interested in buying or selling real property?
They can always get me on my cell phone. It's 551-262-4062.
All right. Awesome. Thanks, Karen. Thanks,
Thank you,
Melissa, our
Dennis.
producer of this event. Good job, everybody. We'll see everyone next month on Monday, Columbus Day. I think it's 14th, 2 p.m. See you then.
Bye, everyone.